Hey traders, hopefully everyone's having a good day and a finish to a good week so far. So like always, we're going to start off with the S&P. My Brave browser did close on itself over the night, so I'm going to start off with doing a little bit of TA and some of the equities here. I did already look at the crypto side of things because I was more focused on that, but don't really have anything on the S&P chart. So we'll start off from a large time frame, starting off from the weekly. We see a very key level of support right here, right around there. So we're not completely past that zone. We have come back and actually we're trading below this major structural zone. We were trading above it for a while, which did look pretty bullish right there, but we did not see the weekly candle close. We were looking for a retest and a validation, which we got, but the impulse move failed to the upside, meaning that the sell pressure was too great for the buyers to actually break and continue the trend. So then it came back and now we're trading below it. And on this weekly candle, we got around 11 minutes left on this weekly candle and it's going to be closing. So I think that this upcoming week, not the week that just happened, but this upcoming week is going to be pretty bearish or risk off. For the questions in the TikTok, this is the S&P 500 1 week chart. So it's a weekly chart. One candle represents a week worth of trading. And we can see this week, it initially started pretty strong because the previous week was very bullish. We had a wick to the downside, closed at the high, right at the high of early June. And then this week that just occurred was a strong week to the start where we broke out of the high back in June, but then we actually came back down, fell below the recent high, and now we're trading below the zone. So if we're going to get a close in around 11 minutes, I think the next upcoming week is going to be potentially pretty bearish, which means that we're going to be not really looking for alts as much because BTC is probably most likely going to follow what these traditional markets are doing. So we're talking about the S&P, NASDAQ, Russell 2000, global markets if you're looking at the ticker symbol VT. But overall, the risk on potential opportunities like the equities are looking a little bit razor thin for the long side in my personal belief with this candle closure. So we'll dive into the smaller time frames, but I think looking back at the weekly does show that there is a decent amount of sell pressure within this area. We can also draw in a potential ascending trend line connecting the higher lows. Let's do that right now. I'm just looking at this low, and potentially this low to see if it will hold or connect. And that's not going to be absolutely the trend line that we're going to be using to determine it. We're going to be looking at market structure as well. We do see candle closures. Let's just bring that in a little bit tighter. And I think that's going to be very, very nice candle closure, wick, candle closure, candles. So we'll put a projection on that zone to indicate where our trend is or where the possible trend break will be. But at the end of the day, we will be using market structure as well. So on the daily chart, we see that this zone right here, this structure broke out to the upside. We were testing this June high, broke, retest, and then now we're coming back and trading below this previous resistance, which should be acting as a new level of support. Now on the daily, we do still see 9 minutes, so we could crawl back up and hold this previous level of resistance as a new level of support. We don't know that just yet, but the momentum and the rejection from the 30 to 84 zone around there was pretty aggressive. So we'll see how this upcoming week goes, but just in terms of the price action on the weekly and on the larger time frames, it's looking a little bit more bearish. We do see that right there. Let's try to bring this in and make it a little bit more thin, a little bit more precise, sort of like that. Although we do see that candle closure right there, so I think that's going to be the zone that we're going to be using. So it is a zone. We have to understand that it's not going to be an exact price point, and we do see support held here. We do see support held here. So there's going to be some level of support held where the current price is, along with the ascending zone, which is creating additional confluence for the demand. But what we're looking for next week, if we're going to be looking for sell pressure, is definitely 3,200. That's going to be, in my opinion, a clear definitive break back down below the support zone, which should have been held because it was a major level of resistance in the prior price action. So the fact that we're moving to the downside definitely suggests that there could be more selling to come, and in the previous moves down, you can usually see that the sell pressure or the bearish moves are always really going to be more aggressive than the bullish pushes to the upside. We see some nice movement to the upside, but it's kind of crawling, making a series of higher highs and higher lows. But when we do have those sell days or the kind of risk off days, they move very, very aggressively. So I'll be really looking at the $3,200 zone and seeing if the price is able to pass this area. So let's look for the price label. Let's say 32. So that's going to be the level that I really want to see pass in order for me to potentially look for more risk off exposure to the downside, because we see if we are quickly drawing a snip here, we got to understand that this is a big wick on the weekly chart, and then we see that there was a tight consolidation right here, and we know that there's sell pressure at this zone. We failed. This is the impulse move that should have taken the price higher, because that was a first impulse move to take you above the zone, a validation of a new support from a previous resistance, and then the impulse push should have came. Even if we consolidated a little bit, we should be able to break to the upside if the bulls are going to be having more of the confidence in this market. But right now, we don't really see that. We see a rejection from the second high right here, and then we see the price make a lower low from this low here. So right now, we've made a lower low, and it looks like we're making a lower high, holding this previous resistance support as a new level of resistance. And that would be creating and confirming a double top as a fake out for this fake bullish move. So there's definitely, in my opinion, people who are long, people who have exposure to the long side due to this breakout here, breaking above the June high. And now the price is trading below that support, so a lot of people are underwater. I think if we do get a break below the $3,200 zone, that could indicate further sell pressure continuing the move to the downside. And we have to remember that the sell pressure is going to be a lot more aggressive on average than the buy pressure. That's why volatility increases when it goes to the downside, or when the S&P moves to the downside. So what we're then going to be looking for is looking at the VIX and seeing what that's doing, because obviously that's going to be increasing if we are going to expect another sell-off. So there's quite a fade here. That's definitely normal to see when the S&P is slowly chugging along to the upside. Quick look at a lot of questions here. So I will go through all the questions right now, and then we'll go on to the VIX here. I know it's a pump and dump, but can you explain why Dodge is an awful investment? There's no developers actually developing a project. That's simple. There's no advancement in the technology, right? Why would you want to invest in something that no one's working on? Just really would not make any sense. There's no real tangible value that's going to be added on to what there already is. So don't really see that as an opportunity. So this is going to be the VIX. It's not a currency. It is a measure of volatility within the S&P 500. So it's kind of a weird instrument. Will the fear greed index influence the pump? Not sure what you're talking about in terms of fear and greed. So I know what the fear and greed index is, but I don't think that would incentivize individuals to either buy or sell. I think that's just an indicator of what's currently occurring in the market. Yes, you can use it as an indicator to understand sentiment. Like, for example, during this time, fear was at an all-time high. And around here, greed was probably near an all-time high, because we were hitting all-time highs on many of the indexes, if not almost all the indexes. So there's going to be a lot more greed because people are making a lot more money, right? And then when there's worry, anxiety, fear, doubt, there's going to be a lot more volatility, and there's going to be a lot less speculation, a lot more safety seeking from investors, like bonds, like cash, all that stuff. So quick look at the VIX now. This is the 12-hour. Let's just jump to the daily really quickly. We do see that low get held right there. So we're holding that $24 low, which was a previous high back in October of 2019. So you can even see a very well-respected zone right around here. So we are at a pretty significant zone within the price action. We do see, this is just what the VIX does, is it'll contract and it'll contract and contract. And then you'll get these spikes in the volatility, right? And that's where you see big sell pressure coming in on the S&P. So if we're looking at a possibility, we see something like this, right? This is that big move. If we make it smaller, this is really what it looks like that, right? Something along the lines of it. So what we could see is another pop. It's just a matter of, we're going to be obviously probably not like this, but something like this, where when we look at the S&P during early June, we can see it was a pretty significant move to the downside, which was this one right here, June 8th, around there, June 8th to 10th. That was a pretty significant move, and we can see that it fell 7% for the S&P, which is absolutely astonishing. So we'll see where it goes from here. But like I said, 3,200 is this very important level that I'm personally looking at to see if the price is able to pass, and then you could be looking for a possible continuation pattern to the downside. If it absolutely dumps, expect things like the Japanese yen and the US dollar to do very well, and then you'll probably see basically a lot of assets start to correct. I think gold and silver will start to correct quite a bit when you see this, because then the dollar will rise, and when the dollar is strengthening, usually gold and silver don't do as well. So that would be an opportunity to be looking at the metals for pullback in the continuation to the upside if you did not catch the gold or silver move, in my personal opinion. So we'll see where it goes. But that's going to be a key level in my opinion. So let's dive in back to the VIX, but in a smaller time frame. And we can see that there are, not perfect, but some descending zones that you could connect in order to potentially find zones of contraction and volatility. We see 1, 2, 3, 4, and then you see a move to the upside. If you're drawing something similar on the VIX, that would be the option. We see candle closure in a wick. Not perfectly ideal, but that would be the zone that I would draw. And then if we get our nice projection here, and not only that, we really want to see the market structure, which is around here, close above, or the price close above the market structure zone, like we saw right here. So if we're going to copy paste, once we saw the price break above this market structure where you see key levels of resistance and support, that's when you get that huge explosion to the upside. This is going to be our market structure around $30 to $31. So we'll see where the price goes. It could contract a little bit more, but if we start to see a move to the upside in the VIX, as well as the S&P start to move to the downside as well, that could indicate a situation where a lot of things are going to be falling. BTC could fall. Alts definitely will fall. If BTC starts to fall, you'll see the S&P, NASDAQ, Russell 2000, global equities fall. Gold and silver probably as well, just because they've been on such a big run. People taking some profits just because of the uncertainty, and then kind of the only thing that we're going to be looking for longs would be, like I said, things that are safe haven currencies like the US dollar, Japanese yen, euro, and Swiss franc have been doing well, so they might not even love the huge risk off sentiment shift, but why be looking at euro and CHF when USD and JPY would be the huge winners in that particular environment, in my opinion. So let's now look at the NASDAQ. Someone did ask about the Nikola Motors. So I don't really have much of an opinion. I don't really follow single stocks or single companies, to be completely honest. I'm more of a global macro trader and investor. So I'll look at things like gold and silver. I won't really look at single companies. I'll look at like GDX or GDXJ, which are indexes for gold miners and juniors. So I don't really follow single companies or the fundamentals of them or the earnings or anything like that. I'll follow price action of indexes and currencies, metals, cryptocurrencies, and that's what I mainly focus on. So I don't really have much of a analysis or an opinion on that particular company, although I must say, for having no product, no physical product, no tangible, actual delivered product, look at what their market cap is. And I know that there's a lot of overvalued companies, but this is pure tech speculative market cap. And it's mainly just the hype of Tesla in another corporation that is yet to even show any successful development of their technology. In my personal view, I would say that it is overvalued is an understatement, is a good way to put it. Tesla is a different ballgame, but yeah, I don't really have much of an opinion on that. I personally would not put money in it. Just my 2 cents. How's it going, Jeremy? Hey there. So let's now talk about the NASDAQ. Let's go to the weekly. This is that all-time high. So this is really the only index that has broken the all-time high of early February. The S&P hit June. This is the high that a lot of these indexes are still trying to hit. So we can see just how aggressive the NASDAQ is compared to the other indexes that we are looking at. Not just in the United States as well, but even globally, right? So we can see NASDAQ, if you're going to be shorting something, NASDAQ is not the one, right? It's definitely been relatively strong. Let's go to the daily chart. Now we can see key level of support, but what I'm also going to be doing is drawing an ascending zone to create additional confluence for this level of support. So we see initially it was an ascending zone that is also respected for a level of support. So I will put a projection right there, and I'm also going to put a horizontal zone of support right around there. So it's not going to be absolutely perfect. We see that there is a support right here as well. So it's not going to be perfect, like I said, but we know that there is lots of demand around the above 10K range. So if we do see the price, like I said, fall below that 10K, 10.1K range, that's going to be where we're possibly looking at either a head and shoulders or even just a straight move to the downside. But we can see that if we get our brush, this would be considered the left shoulder. We can see a big head right here. And if we're trading below the 10K, 10.1K range on the NQ or the NASDAQ 100, we can see there's a great opportunity for a continuation pattern and then a move to the downside, creating a large head and shoulders pattern. So that would be the reversal side of things for the NASDAQ. And like I said, it's not the one too short if you're going to be shorting something, but this is obviously extremely bullish. And if we see the thing that's bullish start to turn, then really the house of cards, I think, will start falling to the other direction where it's going to be a risk-off move. Kind of like we saw here, we're definitely a bubble in my personal view where there's a huge disconnect from the actual financial markets and the economy. The economic data is slowly starting to turn. We're not really getting a contraction in GDP with some of the numbers. We're seeing consumer confidence still really be pretty strong, especially in the United States. We're seeing CPI numbers not too inflationary, not too deflationary. It's not so bad where it's like 0.5, 0.3, where it's actually not deflationary, which is a little bit surprising. I definitely thought there would be enough deflationary pressure to have the negative CPI numbers for at least a couple of quarters or a couple months, but they're printing enough money. But in short, I do still think that there is a looming second move down ahead of us. I don't want to be too optimistic, but the price action recently is unmatched with how confident the bulls are. Really, you can't argue that the buyers are in the market. They're buying the dips. They're still speculating, and we can clearly see that they're able to break resistances, hold supports, and we don't want to base our opinion too quick. All right, so let's dive into the smaller time frames on the 6-hour chart here. Lots of wicks to the downside, and we can see last time we saw wicks to the downside, they were able to hold this 10.5K zone. So that's going to be a very important level for the NASDAQ. We can also see the wick did touch our ascending trend line, which is now going to be our support zone. So we see, like I said again, lots of demand going to be around this zone. So we need to understand that we can't jump to conclusions. The momentum is still strong. We're still seeing buy pressure coming into the market for the Friday over the weekend. So I think if we start to see this hold and then start to move up, because right now we're just in a consolidation at this point where, let's get our rectangle. Very easy structural high base, right? So we see a series of, let's get our brush, series of resistances horizontally and supports horizontally as well. So this is a base and it's at a high. So that's why I call it a high base, right? If we're trading and trending down and this is like an all-time low and then we see a base form and then you see it break, that would be a base, but it's a low base, right? Because it's at a low. So you see a base just consolidating sideways. It's basically an equilibrium between the buyers and sellers, where the buyers are not able to create a higher high and the sellers are not able to create a lower low. So we're just going sideways right now. So what would we do in this certain circumstance? Well, in my opinion, if you are looking for longs, the NASDAQ would be a good place for longs because it's been relatively strong in the overall index basket that we are looking at. So obviously you need to see the price hold this level of support. The price should be trending back up, and then sometimes you can draw an ascending zones here to create an ascending triangle for additional confluence with the structure, but you might not get that. That's totally okay. What you'd need to see in order for this to be a valid zone, I'd like to see one more validation, because then we have 1, 2, and then 3 validations of a zone. That's what I use. I don't really trade anything under 3 key validation. So I need to see, let's say, a candle closure like that, and then you start trading in the middle, and then you come back up to it, making a higher low. So you got a higher high, higher low, and then you potentially see a higher high. You need to see candle closure. I don't want wicks on a large time frame. 1 hour is potentially the time frame that you would execute on. I execute on the 1 hour. So I need to see candle closure, and then I need to see a pullback to validate the previous resistance as a new level of support with either a type B or a type A, which is a wick or a candle closure. Whatever you're looking for in your structure, I would like to see validation. And once I see that, then you have confirmation that the trade has a high probability of still continuing to the upside. And that's where you look for an entry. You could put a stop entry above the previous resistance zone. You could put a limit order at the re-entry, whatever you're looking for your entries. Try not to use market orders, in my personal opinion, because you get slippage. You have to pay the spread. It's not a great way to go. Limit orders or stop entry or stop limit entry orders would be the best bet in my personal view. So that's the way that I would use my method in order to trade the NASDAQ. Is I would just wait basically, be patient and look for a break to the upside. I would not really like to trade a bounce. I'd rather trade a breakout and a retest and then a continuation. That's personally. If it's going to go that way, it's going to go that way anyways. So I'd rather wait for the highest dependability or the most dependability, and that would be a retest at the previous key levels of resistance. So it's looking pretty good. Let's just get a little bit of water here. Not really going to talk about the Russell 2000. It just hasn't been doing much. We can see a previous support that's very well respected. It is barely holding for a support zone. Not really great to see that it's coming back here, but it'd be nice to see the structure start to hold like here. But it failed when it tried to break out of that range and then came right back in with lots of aggression. So the Russell 2000 is looking a lot more bearish, while the NASDAQ is looking still pretty bullish. Consolidation, equilibrium between the buyers and sellers. But the Russell 2000 has not been relatively strong. It's been relatively weak compared to a lot of the other indexes. So I'm going to assume that if there is a possible opportunity to short in the market, the Russell 2000 would be a better way to go in the indexes that we are looking at. So we'll see where it goes, but it's interesting to see the relative strength between the different indexes that we are looking at. Now we're going to jump into the global markets here. I'm going to take a quick look at the TikTok comments, and then we'll jump right in. 150 demons, XAU, USD. So we'll talk about the metals here in, let's say, 10 minutes. Probably actually less. We're going to go through the global equity, so we're going to go over some equity markets in different parts of the world. We'll go to the currency side of things. We'll look at the US dollar currency index, as well as just a quick look in the realm of FX. And then we'll jump into the commodities, mainly looking at gold and silver ratio, and US oil, or WTI, Western Texas Intermediate crude oil. So that's what the structure is going to be for the next half an hour, somewhere around there, and then we'll dive into crypto altogether. But we will touch on gold as well as silver as well, because they were absolutely mooning Silver has taken a little bit of a seat, and gold's still chugging along nicely to the upside. So we'll do an analysis on both of them. But silver, in short, I'm just waiting until a better opportunity because I was in at 18, averaged out a little too soon after it just made an absolute rocket ship up. But that's what it is. You're not going to catch the absolute top out of anything. But now I'm looking for continuation on silver, especially because of the gold and silver ratio. But gold is obviously a very important aspect or asset to look at as well. Sussex said, is that a double top? Yep, so you could classify that as a double top to some degree. I personally, if you are trading double tops, I personally don't really trade double tops. I like to trade continuation patterns. And let's say you're trading a double top. Instead of actually just trading a double top, I would preferably potentially trade a continuation pattern with a wedge or a triangle somewhere past the confirmation zone. So everyone has their way. Like head and shoulders for me works better, it has a higher dependability compared to double tops or double bottoms. I do a reverse head and shoulders as well. But yeah, the main method that I really like to use is wedges, triangles, just consolidations where you get bases as well. That's really solid, as well as some reverse head and shoulders and head and shoulders. But I don't really get extremely fancy with it. I just can really identify the structures that I trade because I just trade them so much and it's very repetitive. Double top means we go down. Yep, that would mean that we go down. You are correct on the direction of double tops and double bottoms. All right, so let's now go into the world indexes here. Really quick look at them. Not going to dive too far into it. So the DAX, the German exchange, was doing really well. So we are retesting very similar to the SPX, the high that we had in June. And we can see that we retested that zone multiple times. We broke out, and now we're retesting that previous zone. The DAX only had one real pullback, whereas the S&P had a pullback and then a stronger pullback, making a lower low, which isn't great. But overall, it's kind of in a similar zone. Japanese stock market not really doing a whole lot. It's been in a very, very tight consolidation for a while now, but it does look like it is potentially moving to the downside if we are drawing this nice ascending zone right there, and then you can also draw an ascending zone right there. So this does look like potentially an ascending wedge to form a lower high, which isn't great. If it was the same high, it'd be potentially double top with an ascending wedge, creating that second high, which is a very well-respected structure in my view, but we don't see exactly that. But then if we are looking from the previous high and just drawing a trend line, we can draw additional confluence of sell pressure within this zone. So it's definitely looking like the equities could be taking a little bit of a breath here to the downside after their huge run that they've had since like April basically. So they've been in a run for a while. Kind of makes sense that we're going to get some level of consolidation or correction, and I think this could be it for this upcoming week. So I'm going to be preparing myself for a risk-off week next week. We'll see where it goes. Could very well be wrong, but in terms of the equities, just with what we are looking at right now, it does look like this upcoming week could be looking a little bit more bearish. So I do want to be prepared for the opportunities that will be presenting or that will be presented in that market environment. So I'm just going to be drawing some ascending zones here, connecting the higher lows on these global equities. Also, just taking note of potential key levels of support that we could be hitting on the way down or be hesitating to go lower on because we don't exactly know how far we're going to go, right? We need to know the aggression of the move down. We don't know that just yet. We need to be looking at the price action, looking at the bids and asks. But right now, it is looking pretty more favorable for the short side in my view for this upcoming week. So we see that zone. Let's just draw in that minor zone right there. Candle closure, wick closure. And then we see that aggressive resistance right there. And there's that support that we're potentially going to be hitting if it goes all the way down. So we'll see where it goes in terms of these equities. I'm not going to be drawing too many more. The UK's FTSE 100 has been very weak relative to other indexes. We can see it's just consolidating right here. And if we go below the 6K zone, definitely would be quite worrying for the people who are investing in the FTSE 100 in my personal view. So we'll see where it goes from there. But it's looking like the fact that it failed to make a high 3 times has held its support, so it's just in a consolidation, whereas the Japanese stock market index looks a little bit weaker, definitely. And this is the Vanguard World Equity Index. Let's get that a little bit lower, a little bit higher. There we go. And we're just going to make that green because we like to identify supports with green and resistance with red, just to identify the buyers and sellers so everyone understands what zones we're looking at. All right, so let's get this zone right around here. That's going to be a pretty important level because it was a previous resistance support zone. And then if we really wanted to, we could probably draw in this zone. Maybe like that, just to create additional sell confluence for that high, because we do see that high get hit right here, as well as this ascending resistance zone, which that is its third rejection, like so. So that's going to be an ascending wedge, could potentially start to fall down. We'll see where it goes, but there are some indexes that have some ascending wedges, which theoretically could melt up. Like if it starts to break above, let's say $80 and then retest that zone, you had a melt up in BTC from an ascending wedge that melted up after the 7,700, so it can occur, right? So that's going to be, let's just make that a little bit bigger. So this is the World Equity Index, right? We can see all-time highs at 83 right around here. So if the overall momentum is moving to the upside, I'm just going to look for something that looks like it. Maybe something like this, right? You get a move up, you get a retest. Make that a little bit smaller. There we go. That's what I'm going to be looking for. Something like that, right? So you get a break up, and then you get a retest of this zone, which is going to be a new level of support, and it might go higher. We don't exactly know what the market will bring because it's very uncorrelated with the overall economics in my personal view. So I'm mainly relying just on the technicals and the price action of our multi-asset analysis in order to understand the global risk tolerance for investors. All right, so gonna get a little bit of water, and then going to be looking at some currencies. So we'll start off with the US dollar currency index, which is DXY ticker symbol, and then we'll jump into a tool that we use in order to understand relative strength and weakness, which will allow us to gauge where capital is flowing. Are they flowing in risk on currencies? Are they flowing into safe haven currencies? That will give us a good understanding of global sentiment. Water is almost running out. Okay, so starting off with the weekly, we have identified a zone around 95 that broke. It's just in pure capitulation at this point. 94 is the next zone. We can see it was a very strong level of support. If we're going to the monthly zone, very strong level of support. We can see resistance turn to support. So that's going to be the next level that we will be potentially seeing some bids in, but man, what a move to the downside. We do still have some space to go, so if we are zooming in, I think that DXY will continue to fall here for another little bit. Let's go on to the smaller time. But I think earlier next week, it'll definitely still have a move to the downside. So you got to bring this all together. If the US dollar is going to continue to fall, that probably means that the overall risk on investments and assets that people are investing in are going to keep on going up. So we need to see a confluence where the US dollar is starting to move up and risk on assets are starting to move down. We already see a hint, a little bit, in my opinion, that equities are starting to move to the downside, right? The SPX broke and then broke up to the upside, failed to hold the support, and now made a lower low, and is now broken below a major structural zone. We see stuff like the DAX fail to make a new high. We see the FTSE 100 weakening kind of coming down. So overall, I do think that we could have a sell-off in equities here in a little bit. So then that would mean that the US dollar would probably have to go up, right? So then what we'd be looking for is, okay, well, it looks obviously extremely bearish right now. I can't argue with that. But let's just draw some initial structure for the market because it's definitely creating some solid market structure. This is a wick on, let's say, a 4 hour. So I'm just going to use the previous support and resistance right around there. So we see two previous key levels of support turn resistance, and then we see if we're really wanting to get nitty gritty, the same thing happened right there. So we see very, very well respected market structure, right? And then we can also draw in a trend line, which isn't absolutely perfect, but we do see previous resistance turn to support right around there. Oops, I think I moved something. Yep. And then we get our projection going like that. And we can also see there's some nice respected lows right here that are also respected. Maybe we'll bring that down here. We'll see how that works. We're looking for 3 respected zones, so right around there. Yeah, it can go really way back if we want it to. So let's go like that. Let's go like that, and then let's put a little bit of a projection on there. So it'd be really nice if it held this zone and kind of found a support maybe at 94. That would be ideal. It might have a little bit of a move down, but we know that there's a strong level of demand here. That is for sure. Doesn't mean it's guaranteed to hold, but we know that it has been in historic time frames a strong level of demand here, a strong zone of sensitivity. So let's get our snip and discuss what's happening to the dollar here. So we were in a full capitulation, just massive move to the downside, right? And then we started really trending down because there was another less aggressive ascending or descending channel right here. And once it collapsed down, it became more and more aggressive to the downside. It dropped faster and faster. But at a certain point, we started seeing a little bit more structure in the markets, right? We're seeing validations of a support here, a descending support. And this previous resistance right here is acting, or previous support is acting as a resistance right here. So it's not valid 100%. We can also draw some market structure right there. So what we're going to be looking for is we're going to see a point where things are going to be changing if we start to see equity start to fall, right? And this is going to be along with BTC as well. So we know that there's a lot of demand right here. We could have a little bit of a capitulation, but if we start to hold this level of demand, well, we have a really good understanding of what we're going to be doing, right? Because our direction is to the downside. This is the floor which we cannot break if the buyers are going to be holding it, right? We're going to be contracting in volatility where we're still going to be holding these lower highs. We might have to adjust this trend line maybe a little bit, but we'll see where it goes. And at a certain point, it's going to have to decide. It's going to either go to the downside or go to the upside, right? Our expectation is heavily relied on our ability to understand the correlation between the negative correlation between risk on assets and the US dollar. So that means if the US dollar is starting to break, this is currently the market structure that I'd like to see break. So we're not looking for just the price action. We're also looking for structure, right? Not really poorly written, but we were looking for two things. Price action, which is a descending channel formation, as well as the market structure, which is the horizontal zones that structure the market. So right now, we want to see this zone break, as well as this zone break. We're probably going to get a consolidation before, but it's going to be something like that. And then ideally, we want these nice rounded bottoms with a horizontal level that's a cap. So these bottoms that go like this are absolutely perfect. And when you're looking for a possible opportunity is a continuation pattern here, continuation pattern here, continuation pattern here. This is the type of structure we're looking for. So it definitely is a lot more to price action to go. We are very early, but I do think that if if things go according to plan, that could be a great reversal for us where we're going to be looking at risk off exposure and strength in the US dollar. All right, so let's now quickly look at some FX markets here just to see what's happening and to understand what a risk-on environment looks like in the FX market and a risk-off FX market looks like, because they are two very different things. All right, so let's see what's doing well right now, right? So this is the 4-hour time frame. If we're going back from, let's say, July 12th to 24th right now. So in a 10-day period, what's been doing the best out of all the things we're looking at? Well, Euro's been doing the best, and we're comparing everything to JPY, because then we have one thing we're comparing everything to, starting from the same time. So this is great for relative strength and weakness. Euro's been doing really well, right? What else has been doing really well? Well, we see CHF, which is Swiss franc, which is also a safe haven currency. So we've seen Euro, which is a safe haven currency, although it has been doing a lot better in a risk-on environment compared to things like JPY and USD. But we do see things that are more risk-off actually start to take the lead. Something to note, though, when we do look at USD, it is at the lowest point. So if you are holding any of these currencies, the US dollar has been doing the worst. And that's just in this time frame, right? And if you do zoom in, we can see that CHF is taking the lead. So it's recently getting into a potentially risk-off sentiment, where if we do zoom back quite a ways, we can see the New Zealand dollar as well as the Australian dollar do take the lead in terms of the highest appreciating currencies, which means that since June, it's been in a very risk-on environment. But when we go and zoom into a smaller time frame, we can see things that are doing better now are going to be risk-off currencies. So it is very overall correlated with our overall analysis, in my opinion. It makes sense. It's creating confluences with our multi-asset analysis. So good to see. All right, now we're going to go on to gold and silver, because man, have they been absolutely rocketing. Quick discussion on the gold and silver ratio. Before we go into these two metals, because the gold and silver ratio is pretty important to understand when you are trading gold and silver, in my personal opinion. So we know that we were in an ascending wedge right here, a very, very large ascending wedge. Let's just go like this. Did not draw that trend line, don't know why. There we go. So this is that trend line right there. And then we have this zone right here, which was our resistance area. So we were able to hold that zone, make a massive move to the downside, and I think that we're going to be holding this zone potentially, because we see a lot of buy pressure right here. We see, look, if we zoom in, let's get our brush. Initially, it was sell pressure we see right there, but it turned into a lot of buy pressure, right? We see right here, all along here. So we know for a fact that around the 82 zone is going to be a key level of sensitivity. And we're seeing it consolidate right now. If we are zooming into a smaller time frame, we see that there is finally some recovery from gold compared to silver. We were at a point where even if gold was doing well, silver was just outpacing gold by a long shot. And that was here as well as here, right? That was when the gold and silver ratio was really plummeting, when we were yelling from the top of the rooftops, why be in gold when you could be in silver, right? And we did really well in these two moves here. And right now, I'm just patiently waiting right now, because we're hesitating to move lower in the gold and silver ratio. I'm not going to do a full analysis on this because I'm not going to be trading this. It's just an overview of the comparison between how much gold you can buy, or how much silver you can buy for 1 ounce of gold, basically. And right now you can buy 83 ounces of silver for 1 ounce of gold. Before you could buy 127 or 128. It was crazy. But I think the overall momentum is going to continue to the downside. But we can see we gotta have breaks within the move to the downside. You're not going to go one way forever without having some sort of correction consolidation. And we just had a huge move to the downside. I think we need some sort of correction and consolidation before our next strong push. So overall, it looks really bullish, and I'm going to be looking for continuation patterns for silver and gold, but primarily I want to be looking to long silver more than gold, because I think that silver is going to appreciate at a greater rate. So it's looking really great right now. Let's just quickly go over the weekly chart, see where we've been, and understand that we finally crawled out of the consolidation zone that we were in since around 2014. And if we're looking at gold, we climbed out of that back in fall of 2019. So if we're going to go to the weekly chart or even monthly chart of gold and go like this, and go even the monthly chart of silver, this is the zone I'm looking for. So let's go like this. Let's take a picture. We talked about this yesterday, but I just want to make sure people understand. Look at where gold was when it broke out of its consolidation. Remember that basing pattern? I really like looking for continuation patterns, continuing its momentum. And look when it broke out. Look when it broke out, right? Late 2019. So October, November of 2019 is when it broke out of this structure right here, this basing pattern. Look where silver is, right? In my opinion, this is where the base is right there, because on the monthly chart, yes, there's a candle closure right there, but we can see key level of support, key level of resistance, key level of resistance. So we know that around the, let's say, $18, $19 zone is going to be the structural zone of resistance for silver. And we can see that right here, right? Not even and this is the high we had in 2011 for gold. We're not even close to the high that we had in 2011 for silver. We're like just barely breaking out. So when people say it's, too late for silver, I definitely don't think so. Silver was just doing nothing, and it wasn't really getting that much bids when silver was initially breaking out of the $1,400 zone right around here, right? Where silver is just breaking out of that zone. So I'm going to be looking for silver opportunities more so than gold. I think gold is looking great, but I think silver is going to be the place to be in terms of shorter term swing trades, if you had to pick between the two. But man, oh man, if it's going to be closing in 7 days above this zone, it's going to be closing higher than we had in 2011, which was a monumental bull run took us there. We don't even see it on this Owanda chart, but it started in like early 2000s, and it's just been on a bull run up to 2011 with a little bit of consolidation in 2009, 2008-ish because of the great financial crisis. So let's jump into silver here, because actually let's go to the daily chart and understand where that major key zone is, around $18, $19, or $19, $20, somewhere around there. So that's going to be the first major zone. We also do see a pretty key level of support at around $21.30-ish. So let's jump into a smaller time frame here. Kind of looks like BTC, to be completely honest, with how this consolidation looks. Really though, like if you look at the weekly chart, how similar does that look? That looks pretty damn similar in my view. But anyways, got a nice support from a previous resistance. Right around there, squeezing down, which is good, but we want to see market structure break as well. So I'll take this off just because, actually I'll make it really small and make it white. That'll do. And then gonna get the projection. Like so. And I'm just gonna go like this, because we know that would be a wick on a smaller time or on a larger time frame. Maybe not. I guess that's where we started off with, but see a bit of a descending zone, which is good. And you can draw an ascending zone. I would rather just see a descending zone. We can even have this support zone break. I don't mind. I'm not looking for any shorts at all. I'm only looking for longs within the metals sector. So right now, I think that's going to be the key structure I'm looking for, right around here. So if it does move to the downside, no sweat. I do have another support here that could hold the price. That would be in line with some other minor levels of support if we really want to get nitty-gritty with some wick candle closure action right around there. So We could get a little move to the downside, but overall, I do want to see silver break around $23, maybe a little bit lower, maybe, yeah, $23 on the dot basically, for me to start to look at longing silver again. So if we get our price label, 23, there we go. So that's going to be the zone that I'd like to see break if we are looking for opportunities to the upside, because it's just consolidating right now. Not a problem, but I would really like to see the price break above this zone, retest, and then continue its momentum to the upside. Don't think it's going to get something like this. I'd still be looking for my first take profit as the size of this wedge. Obviously, we got to do things systematically, but you can get a decent risk reward even from that if you're just looking for possible entries that are like pretty decent with pretty small risk. You could be looking at like a 2.2, 2.1, and then if it trends and goes something like this, obviously that's phenomenal. But the one previously that we were looking at was absolutely huge, and that was this one right here, which did very well for us because we entered right here at 1804, 18039, something like that. So that's obviously an overshoot from our take profit, but sometimes that'll happen. So that's basically going to be my view on silver. We'll see where it goes from here, but if it does break the $23 zone, I will be interested. And once I see that validation, I will be looking to add a stop entry above the previous rejection or the previous retest candle. So if it happens, it happens. If it doesn't, we can always restructure it. So that's going to be my analysis on silver. Not going to be looking for any real shorts, obviously. But if this does start to shoot up, I'll kind of take my orders out and just see what's happening. But if it consolidates and consolidates, it could just drop again. So I will be looking at silver in particular. $150 demons. Is gold making a double bottom on the weekly chart? So let's look at that. I do not think a double bottom would be anything in here. Definitely not. So I would probably say no to your question. Now let's go to the previous high just so we understand where it is, and that's an important zone as well. Go to the daily. It's just, man, on a roar, right? Trending up. Holy crap, hey? So we see another structure right here. You can classify that as an ascending triangle breakout, which looks pretty good. We did call this right here. We talked about this possible opportunity for an entrance above that zone or here with a stop loss here, and then you'd be looking for your first take profit. Let's go like this, the size of this, so let's say just under 1%, so right around the 1844. But this looks like a much better pattern, to be completely honest. Let's go here. Continuation patterns, for sure. So let's get our thing here. So what we're looking for. Ideally, obviously, you want to see that huge pump to the upside. You might not always get it. You might just get a nice break and retest and a nice continuation sort of like this, just to continue the overall sentiment that we've been running with just a consolidation slightly and then a move to the upside, a consolidation and then a move to the upside. So this is a nice overall structure that we can see on gold. We can see there's also a mid-range zone where we've already identified right over here. So you can classify this as either a basing pattern, a high base. We do see resistance turn support, support from the resistance. We can also connect the higher lows to create an ascending trend line, which creates an ascending triangle formation, where you'd be looking for possible entries from the previous resistance, which is acting as a new level of support, with a stop loss below the previous low. You can go from this low, which is a little bit more of a decently large stop loss, or you could go and tighten it up so it's just below the previous wick low, which is a little bit better. And then your first TP could just be the size of the structures that they've been forming. So somewhere like this. And you're looking for possibly somewhere like that. Obviously, you do want to take into account your risk reward. Maybe a little bit higher. Let's just take that for maybe this one, this structure. Somewhere maybe like that. And then you can also look for an ascending triangle size like so, which would be maybe a second one, which would be like a 4 risk reward, something along the lines of that. So that would be what I'd be looking for in this continuation formation for gold. But we'll see where it goes. I am going to be mainly looking at silver for an opportunity, but gold does still provide some really good opportunities for sure in terms of structures. So we'll see where it is. I'd like to see it retest one more time, but that is an opportunity that I would be looking for. So looking at the questions here, that's basically the completion of the global macro side of things. Evan says, what instrument is this? So I was looking at gold. It's AXU USD. You can use futures. You can use CFDs, contracts for differences. You can use, there's like, you can even trade gold on like Binance, I believe. A lot of different ways to gain exposure. You could trade GDX, which is an index. You could trade GDXJ for gold exposure for the juniors, whatever you're looking for. You can find it in the financial markets for exposure. But yeah, we were just looking at gold, and that's going to be done for the global macro side of things. We went over equities, we went over currencies, and then we went over metals or commodities. And we're not really going to touch on oil. Oil's been absolutely doing nothing. It's slowly been moving up, but you got to understand that this is compared to the US dollar. So the fact that this is only slightly moving up when the US dollar is completely capitulating is definitely a little bit worrying for bulls in oil, in my personal view. What's the ticker for gold on Binance? I don't exactly know. I did see that you can trade different currencies. Like you could trade exotics, you could trade TRY, so you could trade ZAR, so like South African Rand, Turkish Lira. You can trade the Mexican Peso, I believe. And I'm pretty sure you could trade gold and silver, but I don't exactly know what the tickers are. But pretty interesting. I can get you them if you really, really need. So I'll just leave this here because it is the weekend and futures and CDFs are not trading over the weekend. But what we're going to be looking at is BTC. So we'll just quickly take a look at some of these different currencies that we're looking at BTC with. They're not going to be much different, but Japanese yen, euro, and Australian dollar doesn't actually show much data. So maybe it's not worth looking at, but I was going to get into something, maybe not. Let's just stick with Binance's weekly chart, and let's just stick on log and draw our descending zone right around here. Remember that we drew two descending zones, this first one from the previous resistance as well as this one right around here. A lot of sell pressure where we currently are at. Yeah, I saw Euro, USDT, and GBP. Yeah, so it's kind of interesting that they're getting into the FX market or the FX side of things, but they're trying to expand. I guess different asset classes is the next expansion point, which is a little bit surprising, but that's okay. I think I'll just leave those two there. And then let's just draw our horizontal zone of support right around here. And we'll make that green. And then we will also dump into the smaller time frames and discuss what we're currently seeing within the market, because we are definitely seeing a move to the upside here. Let's get that red. So we've got a ton of sell pressure here. That's the worry for me, thinking that this is still going to be a breakout long, just because the amount of sell pressure in the current market just above the price. And then we got another one right around here. And then we got another one. Let's get that. which we did break. So let's go to the smaller time frames and use our white. So we are making and forming a nice market structure here after it broke this descending zone. So let's get the previous support turned to resistance multiple times like this. Get our projection. Like so. So if you are actually just looking at the price action and thinking objectively, it does look pretty bullish because we do see a nice squeeze within the price action. It broke to the upside. You started seeing higher highs and higher lows. Let's get that a little bit more clear all the way to the wick. So objectively, it looks really solid, right? But I'm looking at this also from a global macro lens where risk on assets are not doing as great. And we can also go here and looking at the correlations between BTC and USD. On the 90-day, which is the shortest we have, it is moving down, but we can see, let's just go all the way in. We're still at a positive correlation of just over 17% or 0.17, right? So there's still a positive correlation. If we see this absolutely dump, so if we zoom out here, and if we see something where we have these points where we're just absolutely dumping in correlation, that could mean that the S&P is going down and Bitcoin is going up, which would mean that Bitcoin is considered more of a risk-on instrument during, or risk-off instrument during the risk-off time. It'd be more basically correlated with gold and cash and bonds compared to the NASDAQ, the S&P 500, Russell 2000, and stuff like that. Risk on assets. Or Australian dollar if you're in the Forex markets. So we'll see where it goes from here. I'm still quite a little bit uncertain with it actually breaking the volatility to the upside because we do see volatility is still contracting. It did actually expand a little bit. We saw a little bit of hesitation there, but we're looking for these massive moves where it goes from up to huge move up, down to huge move up, right? And it's going to be a quick move, but we haven't really seen that yet. So I'm just still waiting for the expansion in volatility. And it is creeping up slowly to the upside. But when we saw this move, there was a lot of fake outs to the upside as well, where we saw, this big bullish candle, and then you saw this break right here, which was, I thought, pretty significant, especially because this was a pretty important zone of confluence like that. And then you saw a rejection down. You did have situations right before the massive move to the downside. Like this definitely, I thought, would have broke right here, and it broke down to the downside, and you got this massive bullish candle that pushed the price all the way back up, took out all the shorts. You got this little squeeze to the downside, and then you saw another squeeze move to the downside. It recovered, so you're getting these recoveries, and it's just noise. I personally don't think that it's great to trade noise. I'd rather look for trending markets that have higher probabilities. And it's just my personal view. Some people might be absolutely killing trading BTC right now, especially during this phase. It makes sense during this phase because you do see market structure going like this. You see right there, previous resistance, new support, previous resistance, new support. Totally makes sense right now to be looking for longs. But if you are zooming back, as well as looking at more of the multi-asset analysis that we like to conduct, it's not looking as great for longs, in my personal view. So that's why I'm being a little bit hesitant, because we are looking at the global equities as well as the US equities, and it's kind of taking a shift. So it's different if you have investments and trades, because I obviously have investments and I also have a trading pool of capital, which I trade on Bybit, Binance, and that's going to be different, right? I'm not entering and exit my investment. I'm just slowly accumulating more sats and Ethereum, and that's different from trading and looking for trade opportunities, because I do believe that BTC and Ethereum are going to be extremely appreciating in the next handful of years. So you got to definitely have two different baskets or pools that we are looking at. So when we are going to the smaller time frames, looking a little bit more bullish, but man, like I said, I want to be a little bit cautious for sure. reaching that next zone right here. We'll see how it reacts to. Let's now go on to the smaller time frame. So yeah, like I said before, the volatility is decreasing quite substantially still, and that's why I'm still hesitant, is because I don't want to be entering when volatility is still contracting. I want to be entering when volatility is expanding, because the continuation will move, and you'll have a lot of follow through if you're able to manage your risk. Even if you take 1 or 2 shots, you're able to manage your risk, you're really able to have a good entry here and a really good risk reward. So still contracting, so I'm still not confident that up is the direction that BTC is going to be going. In terms of the total too, for altcoin market cap, we're seeing a surge in market cap for alts, which is great. So we do see very well respected market structure right there, and we also see the previous resistance now break as we're getting higher. So we are going to be looking at alts, and we'll be looking at alts today. Also quickly looking at the BTC dominance, we do see that it is decreasing. We do see a support zone right around here that is potentially going to be holding, but right now it does look like it is weakening. It's a pretty wide range, so we do want to consider that. We also see a descending zone right down here that's able to hold right around there. Not absolutely precise, but we do have to consider that there's going to be a demand zone here. And if it goes below it, that's just going to give us a signal that alts are going to be running, and we do have to look at alts specifically because they'll probably be showing relative strength to BTC. Nothing really here. All right, so things that are running. SXP is looking like it's running right now. Holy crap. Ethereum is running right now. Let's look at BNB. Holy, that is spiking. Let's look at that actually right now. Yeah, wow. It was in that consolidation before the video. Let's look at the 5-minute. SPX and BNB are going crazy. Yeah, they definitely are. Yeah, if you're looking for an entry, $2 is a really good spot. And if you're going all the way back, right over there. I'm actually going to log into my Binance here really quickly. Give me one moment, and then I will be right with you. Unfortunately, I might have to get off the TikTok so I can get in to my Google Authenticator. So let's just do a quick analysis for the rest of TikTok. We do see that VeChain is still yet to break out. We're looking at the 0.019 and 0.01995 range for retests for a possible entry after the breakout. Cardano is also in a very similar space. 0.12 and 0.135 is going to be the key levels that we're going to be looking for retests on the breakout to the upside. And we did enter, and I lost a little bit on Link. Going to be 100% transparent with that one. We entered, or at least I entered on, let's get the brush, on the retest right there. Initially, it was right here. I did have it go a little bit further down because my stop loss was below the zone, and officially it hit my stop loss. So I did take an L on Link, but that's no worries. Definitely be looking for continuation patterns still. We do see this nice possible ascending zone create a symmetrical triangle pattern. We don't exactly know just yet, but it could be a possibility. It's on our radar. I'll just leave that there. But it still looks like we're creating a higher low, which is not a problem. So we'll see where it goes from here. But the main one that I think that I'll be looking at right now is actually either Binance Coin, but mainly SXP. And I want to enter here. So thank you very much for watching on TikTok. If you want to continue, check this out on YouTube. I'll be continuing the live on YouTube.